Sure. Yeah. Consolidation makes a ton of sense in the energy industry. If you look at the U.S., there's a lot of operators in each basin, 20, 30 operators in each basin. A lot of them are smaller players. As you get bigger, the operations get more efficient. So you have trucks driving by each other, duplicative processes. So economies of scale make a ton of sense in energy. So consolidation makes a lot of sense. In general, financially, it makes sense. It's very good for shareholders because when you combine the two, the combination is more profitable than it originally was. Usually what holds these things up is sometimes it's the management teams, it's the board of directors, but it makes a lot of financial and operational sense to consolidate.
You know, when we talked with Bill Speed about this yesterday, there's some who have said, well, would a Biden administration allow for big deals in the energy space? Bill joked, hey, if it raises the oil price, that's kind of the goal anyway. It would hasten the energy transition. I mean, do you think that would be an outcome here?
It's possible. In general, when companies do consolidate, the production can be lower than it was originally with the two companies separately. But I would say in general, this is a commodity business. There shouldn't be any kind of trade restrictions or monopoly issues. So it makes a lot of sense to happen. Regulators shouldn't have an issue with it, and I don't think it will have that significant of an impact.
You are among many concerned about underinvestment in this area. Just talk through that. I mean, and investors obviously are trying to kind of benefit from that in the near term, but no one really wants to see it get to a point where oil's at 200 because we simply don't have the supply, although it's bearish trading behavior over the past 3-6 months anyway sometimes makes you wonder if those assumptions are all too bearish to begin with.
Sure. So a couple things to think about. With all the talk about a weak economy, electric vehicle sales hurting oil demand, work from home, we are at an all-time high in oil consumption right now. So we're consuming more than we ever had with all those factors. So oil demand is growing, populations grow, people get wealthier, they consume more energy. The issue is that with rising demand, we're not spending enough money on supply. The easiest way to think about that is compare 10 years ago, 2013, with 2023, where we are today. 10 years ago, we had a smaller market, and we were spending more money. So 2023 versus 2013, we're 15% larger oil market, but we're spending activity-wise probably 20% less. That means that we are probably underspending as demand grows. And supply, we're seeing a lot of issues, whether it's in OPEC, we're seeing some productivity issues even in the Permian, which is growing. This means that it could be very difficult from a supply-demand perspective. The issue becomes most oil projects are long lead time. If we get in a situation where we're undersupplied, it's difficult to get out of it other than very high prices.